Hello, my name is Trista Lial, and I'm a district manager and certified financial counselor for First Financial Credit Union. Today we're going to talk about the B word. That's right, we're going to talk about a budget. When you think of a budget, what comes to mind? It's such a hassle, there's so many restrictions, I'm getting a headache just thinking about it. But in reality, having a budget can be a very freeing experience. It can relieve the stress of wondering how you're going to make the next payment or make it to the next paycheck. So let's get started. What is a budget? A budget is simply a plan on how to spend your money and is commonly referred to as a spending plan. A budget forces you to take a close look at your spending habits and to rethink some of those habits. It sheds light on some bad spending habits so you can make adjustments. A budget can also help you to save money, to focus on financial goals, and to plan for emergencies. A budget is based on how much you make in income and how much your monthly expenses are. A good starting point is to sit down with all the key players. It could be you by yourself or you and your significant other. Take some time to write down all your net income that you receive on a regular basis. This is the amount you receive after all deductions such as withholdings or 401k contributions. For example, if you get paid every 2 weeks, write that down. If you receive money periodically from your parents, don't write that down, since that's not a consistent source of income. Next, write down all of your fixed expenses. These are amounts that would go towards your mortgage, your rent payment, car payment, insurance, utilities, childcare, credit card payments, and so forth. Then list any amounts that you put into your savings. We'll consider your savings to be amounts that are contributed to a savings account, a retirement account, or an emergency fund. Ideally, your emergency fund should contain 1 month's income. Finally, make a list of your flexible expenses. These are your expenses that are going to come up every single month, such as your vehicle, gas for your vehicle, groceries, lunch money for the kids. They're expenses you have every month, yet the amounts may change. Now, take your total income, subtract the amount that you put into your savings, subtract your fixed expenses, then subtract the amount that you put into your savings. What's left is called your spending allowance. Your spending allowance is what you will use for your flexible payments, again, which are gas, lunch money, dining out, groceries, medical expenses, clothing, and so on. This amount may change every month, and when things are tight, you might have to forego the extras. When you feel like you're a little ahead, you can make the best use of those funds. Can you pay down the credit card a little bit more? Or put more money into your savings account? Maybe even start that emergency fund like you've been wanting. Have you ever looked back after just getting paid and thought, where did all my money go? You'd be surprised how fast small miscellaneous purchases can add up. If you want to see what you've spent, I suggest the following. Take last month's bank statement and add up all the amounts that do not fall under the fixed and flexible amounts. Remember, those were things like your mortgage and rent payment, gas for the vehicle. These miscellaneous purchases include eating out, Netflix, Amazon purchases, or even your daily Starbucks run. How much did you come up with? Surprising, isn't it? I'll admit, when my husband wanted to sit down with me and review our statement, I was resistant. I thought, I don't spend a lot of money. We don't go out to eat a lot. Boy, was this an eye-opener for me. If we could decrease or even cut out some of these expenses, we could allocate that money towards a specific payment or add it to our savings account. After completing this activity, you might think, I don't see that there's really anything I can cut out. So now what do I do? When reviewing spending habits, you can often cut your spending significantly in several other key categories. I'd like to share with you some simple ways that you can reduce costs and apply savings elsewhere. Food. Save eating out for special occasions and make your meals at home. If you do eat out, opt for water instead of soda. Do you eat out for lunch? You'd be surprised how fast that adds up. So replace eating out with a healthy meal from home. Clip coupons. Join grocery store membership clubs that qualify you for automatic discounts. Buy generic brands. Most of the time, you hardly notice a difference in the taste or in the quality. Shop at discount stores, or buy in bulk the items that you use frequently. Clothing. Look for sales instead of paying full price for items. Shop at consignment or thrift stores. Sell your used clothes that you no longer want or need at thrift stores, consignment stores, or even rummage sales. Make clothing last longer by learning to perform simple repairs such as a rip or replacing buttons. Transportation. Determine how many vehicles your family really needs. Perform timely car maintenance to avoid costly repairs. Ride your bike when weather allows. And you don't have to buy your bike brand new. You can find a used one at a garage sale or a moving sale. Carpool with family or co-workers to reduce gas costs. Combine trips when you run errands. Or use public transportation if it's available in your community. Utilities. Determine whether both a cell phone or a landline are needed. Regularly review services from telephone, cable, internet, and wireless companies. You might be paying for services that you don't need. Contact utility companies to determine if you're in the best plan or package based on usage. For example, telephone companies will often offer you a discount if you bundle multiple services. Turn off anything that's not in use, from the lights in the house to the air conditioner. Run the washing machine or the dishwasher with full loads when at all possible. Buy a drying rack or a clothesline instead of using the dryer. Or use a programmable thermostat to automatically adjust the temperature when you're away from home. Or when you are at home, try setting it a few degrees cooler. Entertainment. Borrow books, CDs, DVDs from the library instead of purchasing them. If you do prefer to purchase them, visit rummage sales to find low-cost reading material, movies, and other entertainment. Meet friends for weekly walks and low-cost craft sessions instead of going shopping or going out to lunch. Make your own gifts for special occasions. Substitute local vacations for popular tourist spots or visit amusement parks. Miscellaneous. Pay bills online to save postage and paper. Most banks and credit unions offer free bill pay. First Financial does. Pay your bills in advance to avoid late fees. Manage your checking account carefully to avoid NSF fees and courtesy fees, as these can add up quickly if you're not careful. Again, these are just some simple suggestions that over time may decrease your expenses. But what if after looking at your expenses, you realize you need additional income? Here are some options to increase your income and improve your financial situation. Work overtime. If your company allows overtime, volunteer for extra hours. Take on a second job. If you choose a job at a department store, for example, employee discounts may be offered for clothing or other purchases. Sell something. If there are some possessions you can no longer afford, like that boat sitting in the driveway, selling it can reduce your debt and bring flexibility to your budget. Think creatively. Is there another service you could provide that would bring in additional income, such as a paper route or dog sitting? Every little bit helps. Set long-term goals. If a second job is not possible right now, create and follow a spending plan that can make it possible to change your circumstances in the future, such as additional job training or higher education. Again, these will result in additional income down the line. So at this point, we've discussed the importance in creating a budget or a spending plan, the key factors needed to determine what amount we're working with, and how we can decrease expenses. So now what? There are some different ways that you can divide up your spending to ensure that specific amount goes towards a specific item. For example, you may find that an envelope system works for you, where each envelope has a name, from utilities to the car payment all the way down to groceries. If the envelope system doesn't appeal to you, how about opening additional accounts without any debit cards for specific purposes such as your rent and mortgage? This way, funds are harder to access because they're out of your main account, and you won't be able to overspend using funds that were allocated for another purpose. At First Financial, there are no limit to the number of accounts you can have. When looking at your expenses, you can always provide yourself a reasonable weekly allowance, just in case that shirt you've been looking at finally goes on sale. What should you do if you end up with some extra funds after paying all your bills? First, you can keep that money allocated for the following month. There may be some unforeseen events such as a co-payment or a prescription that you'll need to pay for, so you're prepared for those expenses by leaving yourself a cushion. Secondly, if you find you're ahead, look at paying an additional amount to a credit card or make a principal payment on the loan. Again, every little bit helps. When determining what credit card you should pay towards, you have a couple options: the one with the higher interest rate or the one with the bigger monthly payment. Whichever one you choose, stick with that card and continue paying anything extra towards it until that amount is paid off. Then, when you're done with that card, apply everything you were applying towards that card to another payment or of credit card or a loan. Right now, you might be asking yourself, does this stuff really work? I was fortunate to work with a member that we'll call Gary, who came in to get a loan from us. Gary lived paycheck to paycheck. He did not have a savings plan set up, and he relied on credit to supplement his income in between paychecks. Upon reviewing Gary's credit, he had 3 outstanding collections and was unable to obtain the loan. However, he was receptive to our having a conversation about his spending habits. We sat down and looked at how much his payments were versus his income, and I remember him saying to me, "Where does all my money go?" We then reviewed his statement for the last 30 days, and his eyes were wide open as to where his money was going. Now, the 3 collections were small, but big enough that he couldn't pay them off with one paycheck. So, we devised a plan. We started with one collection item and determined how much he could pay towards it every time he got paid. Over a short period of time, Gary got it paid off and moved on to the next item. By the 3rd collection, he was so motivated that he paid it off sooner than we had planned. Gary came in to see me when he was all finished paying these items off to share how excited he was. Gary came in to borrow a loan, yet ended up using his own money to pay off 3 collections, which has improved his credit score. And since this was money he didn't think he had, he was now going to deposit what he was paying to these creditors into a savings account. Oh, and Gary no longer needed a loan from us. Gary realized that what he was looking to borrow funds for wasn't a necessary purchase and would only lead him into more debt. I have to say I shared in Gary's excitement as I felt I went through this experience with him together. Working in the financial industry for 30 years, it's apparent that credit seems to be a way of life. We may not be able to afford the item outright, but we can afford the monthly payment, right? Most purchases are made to satisfy an immediate desire, resulting in inflating the cost of purchases with months or even years of interest payments. We succumb to the gimmicks of 0% interest for 6 months or no payments until the year 2020, which entices to purchase items that we really don't need. When creating a spending plan, it's important to stop creating debt and rather trying to reduce it. Earlier we discussed writing down all of your monthly expenses. Let's analyze some of those expenses using the 5 W's and the H. First, who are you borrowing from? Borrowing from a payday lender is going to cost you a lot more than borrowing from a credit union. Similarly, your department store credit cards are going to have a higher interest rate than your major credit cards such as a Visa or MasterCard will. Second, what is the cost? When reviewing your statements for each debt, you'll be able to see the cost of the funds to you at the end of the term. For example, if you have a department store credit card that has a 21% interest rate and you only make the $60 payment every month on a balance of $3,000, it will take you 10 years to pay that off, and a total of $4,215 in interest over this period of time. Shocking. If you would like to see for yourself what your debt is costing you, visit our website at www.ffnm.org and search for calculators. Third, where are you spending the money you've borrowed? Consider whether you need the latest fashion or the newest set of golf clubs. Can we resist these purchases and save up for them instead? Fourth, when do you borrow? Borrowing for a vacation or a holiday is an easy way to create new debt, which ideally, these are items that you could have saved up for. First Financial offers both vacation and Christmas clubs to help you save for these occasions. Fifth, why do you borrow? What makes it impossible for us to wait to purchase an item until we've saved up enough money instead of purchasing it with money we don't have? Think about that. Lastly, how much do you owe? Borrowing may offer a temporary solution until that first payment is due, and then we're back in the cycle of figuring out how we're going to make that new payment. If you would like more information on how to deal with debt, be sure to join us next week for the topic, Dealing with Debt, Understanding Credit. So, in review, and in an opportunity to win a prize, can you tell me what another name for a budget is? How about one good reason why you should have a budget? Place your responses in the chat below. In conclusion, I encourage you to sit down and take some time to create a plan and stick to it. The goal of a budget or a spending plan is to work with the big financial picture to help you create and develop new spending habits. When a spending plan works, it allows you to take a fresh look at your financial options and possibilities. It will alleviate stressful financial situations since you are in control of your spending. First Financial partners with an organization called GreenPath. If you would like to see some sample budget plans or would like to contact them directly, we have a link to them on our website. If you would prefer working face-to-face with someone, please visit one of our First Financial offices, and one of our certified financial counselors would be happy to meet with you. I hope you found this information to be beneficial, and we look forward to hearing from you.